Hello again, everyone. Welcome back. In this technical analysis of the stock market video, I call it a bear tease because that's exactly what's going on right now. We're in a bear market, but we're getting a bear market rally. And right now, it's a bear tease because it's making all the bulls thinking, well, maybe there's a new bull market starting. And some of these stocks have acted pretty strong. We're going to take a look at Apple, but then just for a totally different picture, I'm also going to take a look at Meta. But first, after we look at the side-by-side view here, we'll drill in and take a look at the Nasdaq Composite and the Nasdaq 100. So here this last week, the Dow was up or down 42 points for the week. The S&P 500 was up 15 points, and the Nasdaq Composite up 267. Now, the interesting thing in here, they've all been up here now for 3 weeks in a row, closing above that blue line, the 10-week moving average. Very similar to what happened back here at the end of March. Almost identical. So it does make you think, is it a rally just like that? Is that all we're getting? But based on the wave count that I've got, I really believe we're getting something a little bit stronger in here. And so that's why I'm a little bit skeptical that as far as we've rallied back, is it enough right now? I mean, you can make the case for why it could be, but I'm a little skeptical, and we're going to take a look at all of that here, and let's just go ahead and dive in and take a look at the Nasdaq Composite. All right, let me pull that up. Okay, here we go. So we've got 5 waves down at that low in June. Now, I've got it labeled Intermediate Wave 1. So where are we right now? We are in intermediate wave 2 on a pullback. And how far have we retraced? Wave 2 as a percent of wave 1 has been only about 38%. Now, typically in a wave 2, I'm looking for 50 to 61.8%. And many times in previous bear markets, we've gotten retracements that have gotten a lot deeper. But we've already gotten very overbought already. So now it does make you wonder, what are we going to do? Are we going to pull back some and then we have more corrective going on? I mean, it's totally possible. When you get into corrective patterns, okay, it could be a zigzag. It could be an Elliott Wave flat, which is, an A, B going all the way back to the beginning of A, and then a 5-wave C. And it could be any combination of those. It can become very messy. As a matter of fact, in terms of corrective patterns, there's something like 11. But the default, the one that you typically go with for wave 2 is a zigzag. And that's what we've got playing out so far, but I don't think it's complete yet. Okay, let's take a look at the Nasdaq 100. And it's very similar in terms of what we've got. Now, here's what I've got labeled here on the Nasdaq 100. Okay, the move down from the high back in November, it took 30 weeks. So now I've got a time frame up here showing Fibonacci relationships for really what I'm trying to do is compare 2 versus 1 in terms of the time frame. Right now, we've gotten a very shallow 23.6% in terms of the time frame retracement. There's no rule that says, oh, it's got to retrace X for a wave 2. This is just to give us some kind of perspective. If it takes as long as 38%, we're going to be out here, September 4th, so into the first week of September. That could be. We'll see. And you'll see, look, where are we sitting with the Nasdaq 100? 38.2% right now. We push up a little bit higher, we're going to run into some resistance here at 330. And then here's 50% retracement. So, it could get a little bit messier going forward, but have we retraced? So here's the pros and cons. We've retraced enough to say, in my mind, this is kind of the minimum that I'd be looking at is a 38% retracement. So now we have to watch the price action. Is it going to continue to evolve and push up, or are we going to start rolling over right now? We'll watch and take a look here. But what I want to do is I'm going to go back to the Nasdaq Composite, and now I just want to show some comparisons to where we have done this before in previous, like back at the 2007, 2008 bear market, or actually into 2009. And let's take a look at the 2000 top and see how that looked. Okay, so I'm going to go into the timeline here. If I can pull it up, there we go. And let's go back and take a look at the 2000, at the highs up here, and what happened with the first rally after we had 5 waves down. Okay, the first 5 waves down from October 31st down here to the low in mid-March. Then we had a 2-month rally, which got above a 50% retracement, right? So where are we sitting right now? Here's what's interesting. This is why I think we're getting, I'm just skeptical that it's going to be enough. Back in 2008, we got to 38% retracement right here, and we got just barely overbought. We got to 70% on the RSI. And we were right at the high of the previous 4th wave because we had 1, 2, 3, 4, and 5. And we got to the high of the previous 4th wave. We had 38% retracement. We got a little bit overbought. You say, well, okay, is that enough? But, it pushed higher. It got above the 50% level, but it got to a very clear resistance level right in here. That, we don't have that really, really clear resistance level now, but I just wanted to point out this is kind of interesting, the kind of deep retracement that we did get with this move. Now let's go take a look. Let's go a little further back. Let me go back over here and take a look at the top in 2000. Little different picture here, okay? This is very dramatic in terms of the move down that we had. And I think we're counting, even if it doesn't matter whether you say 5 waves here or 5 waves here, you got a deep retracement. So let's just take a look at that. Let's just go to this one right here. You could see we came almost to 61.8%, but this was very, very fast. Actually, the 2007 to 2009 bear market, the first wave down from 2007 to 2008 looks a lot more like what we're doing than back here. This was very, very quick and very sharp because this was really from mid-March to say mid-May. So we're talking just a little over 2 months. And then we got like maybe a month and a half rally, and then that was it. I mean, that really was the high. Yeah, we came back up and challenged it, but that was all she wrote. So it's going to be really, really interesting, really deep. It doesn't matter whether you measure from here to here, you're still talking about a retracement that's very much over 50% and close to 61.8%. Okay, so let's go back to our current time frame. So that's what makes me think that, we're right in this level. We got above the prior 4th wave. We're a little bit overbought. We're at 38% retracement. It could get just a little bit messier flushing out a C wave and a wave 2. And of course, it could always turn into a double zigzag. I mean, that's a possibility. So we'll just watch and see what we get, but I'm just not sure that we've had enough yet, okay? But let's take a look at the VIX. So we've looked at the Nasdaq Composite, we've looked at the Qs, and let me shrink this back down so I can get my list over here. And again, let's just go back, look at the Qs, okay? We have a little bit of resistance right here. And then, the next major cluster of resistance is going to be a little bit further up here, which actually brings us into that 50 to 61.8% zone. And actually, I can bring this time frame up and get that out of the way. So right in here brings us right into that kind of like that window of 50 to 61.8% if we continue to push higher. So these are some possibilities I'm just laying out for you. Let's take a look at the VIX and see what it's doing. It's it's not been helping us a whole lot, and it's been coming down quite a bit. It's actually acting a lot more like back over here, that whole move at the end of March. We haven't pulled back nearly as much as what happened in the end of March, but it sure looks like we're on that path coming down. So, it's faked us out a couple of times. Every time it starts to turn, you get one close above that 10-day moving average and you think, okay, here we go. But we don't get another one. We don't get any follow through. Okay, so start, nope, started, nope, started, nope, and then it just keeps coming down. So you look back over here in March, didn't even do that. It just was hard down the whole time. Never got a close above the 10-day until it started to do this, and then very, very quickly we started to get a turn in here in the early part of April. Okay, so that's where we're sitting with the VIX. Maybe we got a little bit more come down here around this key 20% level. I want to take a look at Apple, and I'm going to show you what's going on with Apple. Let's go to the moving average view. So Apple's had a deep retracement. This 7, what am I looking at here with 7? Actually, Friday was day 8. So what am I doing with day 8? What I like to do is, those of you familiar with Tom DeMark's indicators and some of his patterns, this is day 8 of a sequential sell setup, okay? And so I like to pay attention to that just to see how extended the move is getting. Well, that's where we're sitting day 8. And when you get to day 9, start looking to see how the price bars look day 8 and 9. I'm not going to go into DeMark's stuff right now, but it's something I pay attention to, just like I paid attention to it back up here at the end of March. Okay, so here's where we're very big move by Apple, and here's the wave count I've got on this. Yes, I do think very similar to the Dow, the S&P, and the Nasdaq Composite. I think we had intermediate wave 1 back, and now we're getting a very deep retracement for intermediate wave 2. Now you look at this and think, well, the bulls have got to for sure be thinking we are in a new bull market for Apple. Look at this move, very, very extended. We haven't gotten to 78.6%, which is a real deep retracement. We're well above the 61.8. But let's go back and take a look at the top in 2008. And what did we get? Right here. Here's the move down from December into February. And what kind of move back did we get? Not only did we get to the 78.6, we got slightly above 68.7. We almost retraced the entire first move down with this move. I guarantee you that there's a whole lot of people thinking we were in a new bull market on Apple. And then what did it do? It just rolled right on over with the bear market. Okay, so when you look at this, you think, yeah, it's been very, very strong. There's no doubt. The other thing I noticed this is well within the parameters of a bear market rally of an strong intermediate wave 2. The other thing I noticed is I put this line in here as a 10-day moving average of the volume. And the volume from this point, it doesn't matter whether you measure it here or whether you measure it like here, for sure here, but this move right here, the low, June 30th. So since June 30th, this entire move right here, the volume has dropped off on the 10-day moving average of it. The 10-day moving average has dropped by 20% in terms of the move that's happened. So to me, that tells me that the strength of the buying that's been pushing this higher has been gradually weakening with this move as it's getting extended and extended and extended. So that's the picture we've got on Apple. Now for a totally different view, and then we're going to wrap this up, is Meta. Okay, here's the move with Meta. Where's the intermediate wave 2? I don't think we've even finished 5 waves down with Meta. I mean, here's the high. Back September 1, not November, not December, September 1st. And we've come down, and I think that we are in still an ending diagonal pattern for 5th wave. This is what I think is going on here with Meta. So it's not a pretty picture. I thought, well, maybe has it ended in here, but I just don't think so. I just don't see the pattern just yet. So I'm looking for one more thrust down in here, and then we'll see. Now, how does that jive with the end of an intermediate wave too? I have no idea. Maybe whatever we get with Meta is not going to be a very strong counter trend rally. And based on the way it's acting right now, I'd have to say that is probably the case. Okay, so all right, just wanted to talk about those two as really kind of opposing examples. And then when you look at what's happened in the past versus what we're doing right now, well, you know, I think we've got a little bit more to go possibly, but we're going to keep an eye on the wave structure and the price action in here with this intermediate wave too, as the bears continue to tease the bulls. All right, everyone, if you felt like the video was helpful, give it a thumbs up. And if you're not a subscriber to the channel, hit that little subscriber button. And if you'd like more of this information on a regular basis, we look at these things every day, head on over to joehenches.net. Check out the website, check out the membership. Everyone have a great week. We'll talk to you on the next video.